connected. There we go, recorded in progress.
Good
So,
evening. Smile for the
good
pic. There
evening,
you go.
guys. So, we've already explained it to Jay, but for Josh and for the recording, we'll explain what this call is going to be about. It's going to be a bit shorter. It should only take about 30 minutes. Essentially, we're going to be going over the psychology of losses, losing streaks, and all of that good stuff because it's something that everyone struggles with. And as it being the end of my losing streak today, and it was quite a good losing streak. We thought this would be the perfect time, and I think Tom, you've also I don't think quite as severe, but you've had some losses on M5 as well in a
Yeah, it's
row,
been
so
a little bit of a rough patch.
it's probably a good time. So losing streaks, we all have them, and this is what backtesting is for. So I'm going to jump straight into why I obviously we don't know in trading, but why I was pretty adamant that today would be a winner if I followed my rules. In your back testing, you'll accumulate a lot of data. You'll learn things like your max win streak, your max loss streak, your equity drawdown, your win rate, all of that stuff that you need in live trading. And the one that's been key for me over the last couple of weeks has been my max losing streak. My max losing streak is 6. So this is why I trade with essentially enough room to lose 10 trades because that means I have my max drawdown and essentially 4 mistakes and I'm okay. Now, I've not made any like trading mistakes over the last few days. There's been a few hiccups, but they've ended up in profit, but they're not rules mistakes, they're just technical errors. So I followed my rules perfectly. And after losing 6 in a row, I was pretty adamant that today would be the winner. Otherwise, my back testing, well, I'd need more of it. So then I know what my actual max drawdown is. And maybe there's hiccups I've made in back testing. But I knew it was 6. So today was the day that I should have had the winner. And I did. And that is essentially what we're going to be jumping into first, the psychology of that, of knowing your data and why it's important to understand this, how it keeps you safe in the market. And the first point that I'll raise, and then I'll let Tom have one, is it keeps you from breaking your rules. Because if you don't know your max drawdown, or even if you do and you don't like that you're losing this much, you might start revenge trading. You might start looking at all these losses, thinking, oh, something's going wrong. I'm not doing it right. I need to change it up. And then you'll start taking other trades that is effectively a different system. And now that you're starting a different system, you're essentially starting your loss streak potentially all over again. And then you're going to lose more. So you have to stick to the rules you back tested. And honestly, this losing streak for me, it's not been happy. I haven't been like, yes, another loss. But I see Tom pretty much every single day. And I've just been like, I am glad the losing streak is happening now, so early into this evaluation phase for my first future account, essentially, because it means statistically that my next 6 losing streak should be quite a while off because I only had a 6 losing streak once in my back tested year. Now, it can happen again. It's possible because we don't know what markets are coming. So that's why I leave enough room for 10 and why I keep the mindset of if I'm losing now, the winners are coming. I've just lost 6 in a row in essentially a 1 to 2 strategy. So that means at least the next 3 should be winners, and that will cover it. And potentially we get more off that. But it doesn't always work that the next 3 are winners as well. By the way, when I say that, I could lose tomorrow and then I could win 2, and then I could lose again, and then I could win 3. Like it can go in any kind of way, but it should balance itself out, and we should end up in profit as per the back testing. I'll let Tom say his thoughts on that a bit, so you're not just hearing me ramble on about losing all the time.
Yeah, enough of your yap. Come on, my turn. So yeah, it's actually kind of a large coincidence, one could say, how Ayrton's just started ES. Obviously started in December, but I think you only had like a week's worth of trading, am I right? Something like that.
Yeah, and I had. It's also funny. I'll just add before we continue because it's
Yeah, of
quick.
course.
I forward tested the 2 weeks before when Tom was also having his like nice streak that passed and all that, or not that passed. I think it was just after. I can't quite remember. I
Yeah,
was forward testing at the same time. Yeah, so not taking them on an account, but just drawing them on and then writing my result like live in the market. And I had amazing weeks, which is probably why I shouldn't have started because obviously we know that losers are coming. But I was aware of this and we went for it anyway because I know my rules and I know that I'm safe. But before this, I essentially made nearly a K on my forward testing in 2 weeks. So I was owed these losses, and the losses are way smaller than that win. I think in total, I would have lost, well, with the happy accidents, I think I lost about 550, which isn't too bad, but it should be around the 6, 7 mark. So yeah, the winners outweigh the losers, and there was a lot less winners, but they added up more. So that's obviously how we're trading this system. But I'll add that just because it makes it
Yeah.
even worse. That I had my forward testing really good time, come straight into it, happy to do it. Here comes your max drawdown.
Yeah, it's just luck, isn't it, really? It's probabilities and we can't control it. And as I was saying before, it's actually quite a coincidence, not just because he had a winning streak before and he starts now and started losing, but also because this happened to me with both the first month I had with gold and then the first month I had with the 5 minute on NAS. Now, luckily the 1 minute blessed me and I had a very nice, well, a relatively nice first month. Could have been way better, of course. But in gold, I lost the entire month until the last like day of the week or the last week anyway. And one trade made it all back. Same with the 5 minute on September. I've got it in front of me now. And I actually had my max loss streak, not at the start, but at the end I had my 7 loss streak. And the equity streak is actually worse than that. But the principle being is when you're trading, you're always actually in drawdown. That's what people don't understand. They think it's all about this winning, and then when you're winning, you're up, you're up. And they actually kind of forget that you're in drawdown pretty much 90% of the time. When you have a win, as soon as your um, floating P&L goes below, you're in drawdown. If you lose that trade, you're in drawdown. Drawdown isn't necessarily just below your starting balance. Drawdown is below equity high. And it's never just up, is it? It's always up, down, up, down, up, down. But like I was saying, these losing streaks, just like I explained very clearly, you understand your data, your probabilities, understand that, hey, I've just lost 6 times. If I don't win today, then fair play. Then I will be extremely impressed. Now, unfortunately, Aaron's not extremely impressed, and he's like, wow, this is exactly what I expected. So, if we didn't have the data to support us and comfort us, because that is comforting knowing your max loss, your max win, then you're going to experience a drawdown, you're going to experience a loss streak, and it's going to hurt, and it's going to be a lot more uncertain. It's not part of the plan. So we're going to obviously gonna go into explain how drawdowns can affect you, but also how to deal with them as well. So drawdowns are something that, again, are part of the plan, and you have to be prepared for them, and you have to be prepared for almost everything to be thrown against you to make you quit, to go home and cry and curl up in a ball. And if the fact that Ayrton's just started and has had his max loss streak instantly, and my first month of gold last year, in January, bearing in mind, absolutely atrocious until like the last week. And then, for example, September with the 5 minute isn't a good example of how the market can test you, your system can test you, and trading can test you. Then it's something you need to be aware of and understand how to deal. So I'll throw it
Yeah.
back to you there, added to what you said.
Yeah,
So
so
yeah.
drawdown is not a negative thing. It is not. And in fact, the way I look at it and the way Tom sees it as well is so I just lost, obviously, like I said multiple times, 6 times. And that is exactly what my data says should happen, which in fact is a good thing. That means I have followed my plan so well that I haven't lost more than it said I would. I haven't gained more than it said I would in this period. I've got the exact same results in the live market as I did in my back testing, which means if I continue to do this, I also know that at the end of the year, at the end of the month, all of that, I should come out in profit because that's exactly what happened in back testing. So it isn't a bad thing to be in drawdown, following your plan, losing trades. You haven't actually, so you've lost the trade, but you haven't lost the war. What's the say?
You've
You
lost
haven't
the
lost
battle, but you haven't
you
lost the
lost the
war.
battle. Yeah, that's it. I was there somewhere, but there's nothing wrong with losing. And we do see it a lot where people maybe don't know their data well enough and they'll have some losses and they'll start to question. They'll be like, oh, well, this doesn't work. Maybe I'm doing it wrong. Maybe I need to change something. You probably don't need to change anything. You probably just need to know your data better. Because if you have a strategy, say at the end of the year, it returns you something like 40%. That's still good. You've still got a profitable strategy. Say it has a max drawdown of 11, but you don't know this. That isn't a bad system. That doesn't mean that that system isn't profitable. It just means you need to adjust your risk appropriately. That's why we need to know our data. That's why I can risk what I do, knowing I have a four loss safety net. Like I said, this accounts really for mistakes and uncertain markets. So another point that I wanted to bring up is, say this one did lose, I would backtest some more, but I also wouldn't question my system. I wouldn't be backtesting to kind of fix my system or anything like that. But what I'd backtest is this kind of period in the past. Now, right now, we're in a transitional period for the President of the United States, and we are essentially trading 500 of the US companies. That is what ES is, the S&P 500. So all 500 of these companies right now are figuring out how they need to position themselves for this year, for the new president who wants to change tax, who wants to change um, what are they called? Oh,
Regulation.
tariffs.
Regulation.
Tariffs.
Yeah,
That's it.
tariffs.
That's what I was on about. So all loads of stuff is changing in the US. So if the market changes a little bit as to what I backtested, that's just how it is. This is a different time. This isn't necessarily the period I backtested. So I'd go back, go to the year where maybe it switched from Democrat to Republican or something like that, and I backtest it. I'd see if it's the same uncertain markets, and if it is, then I know I've followed my rules. So it's not about being wrong when you're losing. It's about following your data. And if you lose as many times as your data does, then you really know you're doing something right because even your losses are a statistical win. So that's how you need to be looking at your losses. It doesn't mean you're doing anything wrong.
And one thing I think is very important to mention is when you're losing, in particular this scenario, and on many other occasions, it always highlights the importance and the necessity of backtesting. Because backtesting is one of those things where it's so easily underestimated. You can do a couple months, maybe you'll forward test for a week or 2 weeks, and you'll be like, yo, this is working. Okay, I like this, nice couple weeks and you get enticed in and you start trading, but you haven't experienced the system over a period of time where you can say, okay, I've experienced it in this conditions. I've won loads, I've lost lots. A war started here, a bomb went off here, peace was made, love was made, no tax, president, no president, and so on. You experience the entire thing. And besides all the different market conditions, again, you know your max losses, you know your average losses. You know on average, for example, the 1 minute, my average losses is 2.4 to be precise. My average wins is 4.3. Obviously, don't win zero point 0.3, but you get the principle. You have these numbers all in your head. And actually, before this call, me and Ayrton were running through my back testing for the 1 minute, and I was going through each month, and there's days where it's every Monday of a month I won. And then the same month, every Tuesday, I had no trades. Another month, every Monday I lost. Every Tuesday, you get the point. So backtesting highlights the probabilities of everything. So your max loss streak, your equity loss streak as well. So backtesting is the key. And it's not just the key for the statistics and the data, but also your psychology. Because confidence is not given, it is built. And that comes with faith. You have to build on your faith, you have to build on your confidence, and you have to build on your trust. Trust, like all these things, is not something you can just kind of be like, all right, I trust you. You have to like actually give trust. To trust someone, you just have to do it. So with your system, you just have to trust it, and you have to have this data to be like, okay, I can see my data is loyal, and it's only going to give me 7 losses. I trust it. Boom.
Yeah.
And then when you get your 7 losses in a row, you're like, wow, that's what that was for. Whereas if you hadn't done the extensive data recovery, you're not going to have that data. You're not going to have that information. And then ultimately, which we're basically going to go on to now, is going to be the psychology and how it's going to affect you. Because without it, how do you think you're going to think? Well, okay, Eton, let's say you didn't have your. Let me quiz you for a bit. Let's say you didn't have this data, all right? Let's say maybe you'd only done 6 months or just a year of your data, and you're on your sixth loss yesterday. If you came to the market today, I mean, obviously it went your way completely, but let's say today was a loss. How are you gonna feel? What's gonna go through your mind? Let's say you don't even, maybe say your max loss streak was 4 or 5 because you hadn't even done that much data. What do you think is gonna go through your mind?
I'm gonna feel like I'm failing. I'm gonna feel like I need to change the system, maybe even take another trade, change my decisions. For example, today I'll quickly share my screen so that I can explain this better if it allows me to. Desktop two. Right, so if we can see this trade, we'll see that.
Yes.
So my system, same as Tom's, is obviously take the fair value gap, as we did here. But I'll draw that properly. For those with keen eyes, there is a second one here. Now, my system is not to take sells unless I've properly inverted and if I've gone off a liquidity point I like, more like Asia high, because obviously we did liquidate this. So there was a bit of in me, do I switch to sell? Now, in back testing, I would not have switched to sell because we're not at the right point. But if I had lost like two over my max drawdown, I might be thinking, oh, we have taken liquidity, getting scared, and I might have switched to sell. I obviously don't know because I'm not in the situation. But in this case, I was like, what would I have done in back testing? I would have firmed the buy because I like buys more. Essentially, the S&P 500 and Nasdaq should theoretically be constantly rising pairs because businesses constantly get bigger, but obviously they do drop off, and that's why we have pullbacks. But it is a constantly rising pair, so I do favor buys. I stuck to my plan, took the trade. It tested us a little bit, and then it went up, and we took the W essentially. But
Yeah.
yeah, if I didn't know my max drawdown, or if I thought it was less than it was, I'd be pooing myself a bit.
Yeah, exactly. And you made a really good point there. It's the way that losing affects your mind. So, being in an emotional state, having doubt and fear, the lowest vibrational energies, bearing in mind, these not only obviously make you think worse, but they encourage worse actions, worse thoughts, worse behaviors, and more lower vibrational energies. So, not only doubt, fear, unconfidence, you're going to lose faith. It's a negative correlation. So to counter all of the negatives, emotions that you can feel, because they're never going to go away, bearing in mind, you just have to learn how to deal with them and counter them. You have to have something to hold you firm and steady, something to guide you. Like, without going into in depth, that's why God is a thing and makes people very happy and feel like a fulfilled person because it's their grounding. They have life occur to them and they don't know how to react, and they have God. So in your trading system, your data, everything that's backing what you're doing and saying what you're doing is right, that is your God with trading. You have to trust in it, you have to believe in it, and have full confidence in it and its plan for you. If you execute and abide by the laws and the rules that you've created, that you know in your data, you're going to have the same representative equity curve. Okay. So thinking, sorry, allowing, these emotions to affect you is another thing. So one thing you have to be bearing in mind is as well as a losing streak or on a bad day, you're going to have the opposite. But just like you do on a good day, I like to hope when you have a good winning day or a good winning streak, you humble yourself and you say, okay, well done, Tom. Well done, Ayrton. You've had a very good day today, but the losses are going to come. You need to do the same to the losers. Okay, Ayrton, you've lost today. You still had a good day because you should be taking good trades. So on to the next. This is part of it. You have to detach from your trading in a way where it's just one big picture, and every day just painting it. One big jigsaw. Piece, piece, piece. Because when you sit after a couple months, so for example, I've done September, October, November, December, halfway through January, nearly 5 minutes. Sorry, 5 minutes of the 5 minute. I'm able to sit here and I'm able to look at September. I had my max loss streak. Then I'll do it as I speak. October, it gets a bit nicer. Okay, cool. We're seeing some better results. And then I get to December and it's great. But through that entire time, I had emotions. I had doubt. I had fear. I had overconfidence. I had, oh, this is going great. Oh, no, it's going bad. It's going to. But when you, in each moment, at the end of the day, remind yourself, okay, win or lose, this is not a moment to be focused on solely. And you think of the bigger picture. You think, okay, in 3 weeks' times, sorry, 3 weeks' time, worst case scenario, I should be able to pass an account. In a week's time, best case scenario, I'm gonna pass. Once you understand that losses, like I was saying before, are probabilities and that the winners are gonna come even more likely, It's actually something nicer, and it's like rock bottom. When you're having this max loss streak, Ayrton, you know you're at rock bottom right now. So you know to even remotely get to that streak again, your account is going to be gone most likely, and it's going to be very hard for you to get to that point, probabilities wise. So you have to detach from the result of your trade. I will let you jump on this 'cause I know you were talking about this before, Ayrton. Your trades, good, result wise, profit or loss, they should be a good trade. You should be able to sit there and say, I don't care, that was a great trade.
Here, I know what to share. So some people might look at this and it might even scare you that this is how it looks. There's my month so far. It does not look nice. It does not. Like one, two,
Oh,
three, four, five, six
oh.
losses. It doesn't look nice. But for example, this is how trading works. One win here, and we've essentially covered half of the losses of this week. That's just how it goes. One more, that's completely eradicated. Another one, we're now in profit again. We're looking good because that will eradicate this week as well, because that will double it. We'll be 150 up essentially, new equity highs. That is just how trading works. It doesn't always look nice, but we're painting a picture here. If you guys know, there's obviously the big, I guess you could call it a mural on the top of the 16th chapel. I think it was, is that who did that? Leonardo. It was something like that. I can't remember. Anyway, if there's if there's a muck up at that, maybe he's got one of the pupils wrong. You're never gonna see it. That's just part of his painting. You're never gonna see it. Eventually, this will be absolutely nothing. We'll get to the end of the year, be up however much, and we're not even going to be like, oh, what? Look at that mistake. That looks awful, because it will be up however much percent, and we've just got to be constantly looking at the bigger picture. So, to anyone who's still questioning if they actually need to be backtesting, here's a question to ask yourself: if you could look right now at the end of the year and see exactly how much profit you're in or how much loss you're in, see exactly what the mistakes were and what the good choices were, would you do it? If someone could come down and tell you this is what it looks like, here's all your results for the year, would you want that? I'm pretty sure we're all going to say yes. I'd like that as well. That is what backtesting is. You can do that for previous years. You can see exactly how years played out without even having to do them. You don't have to trade it live. You don't have to wait for every window. You trade it, skip to the next, trade it, skip to the next. And the good thing about backtesting that I like to tell people a lot is you'll have bad backtesting sessions. You won't come out good. It won't be the results you want. That doesn't mean the strategy doesn't work. That means you need to refine things, and there might be little tweaks you need to make essentially, which I had to do for the 5 minute. I know a lot of people look at it and go, "Oh, you just take a fair value gap. It's easy," but there's more to that. We need to know which fair value gaps we want to be taking, if we want to flip position, where we want to target. There's all of that stuff still within the window. Yes, it is a bit simpler than M1, but that's why it doesn't return as much. So we need to tweak all these things to get it so it comes out profitable. And it took me about 5 tries to figure out what wasn't working, and then 1 try to figure out how to properly do it. These two were about like just complete drawdown. These two were about break even. This one was better, and this one was much better. It took each one of those being just over a year. So essentially, somewhere between 6 to 7.5 years of backtesting to fully figure out how it works. If you guys have that data, you know which ones don't work and you know what works, then you know what to avoid and you know what to go for. And that's essentially why we backtest and why it isn't bad to be losing in backtesting. In fact, it's better. If you just randomly spray a load of trades all over a year and you somehow come out profitable, there's no system, nothing like that, you're not going to be able to replicate it live. If there's a system that has problems and you learn from those problems, you're going to come out profitable when it's live.
Ayrton, I think this is the perfect time for you to share that beautiful analogy you had from the book. Do you remember
Yes.
it? Do you
Yeah, I
remember it?
do. Yeah, I actually
Okay.
saved the voice note. I figured out from that you can save voice notes to notes. But I
Oh,
do
there you
remember.
go.
Right, I might butcher this whilst I'm
Y-
trying to fully
If
remember
if
it.
you wanna,
But
if you, I can talk for a bit if you wanna like listen to it again and get it in your head.
Yeah, actually, that's a good idea.
Yeah, okay. So, so guys, losing might feel like the end of the world. It might feel like you're failing. It might feel horrible things, okay? But you have to understand every day you wake up with a choice, and you wake up with a choice of how you're gonna feel and how you want to go about life. And I'm not saying I wake up every day and I wake up feeling amazing, and I sometimes choose to choose the positive side of life. It doesn't always reflect how I am. But when it comes to your trading and what's going on in your head, although your person might not be jumping for joy, you're still in your head choosing to think positively, okay? So although you might be feeling rubbish, you might have lost, you can still choose to not allow that to negatively affect you. You can still choose to not allow a loss take over your day. Thailand, before Aaron gives his lovely story analogy, in Thailand, like he was saying about losses, okay, and mistakes. I made whilst traveling Thailand multiple mistakes, and I'm sure you remember them, right?
I do.
I made many mistakes, and obviously that affected my results for the month. Now, in those moments, I'm there in a lovely, beautiful place in the warmth, whatever, sat by the beach, and I have a stop loss, all because I set the trade wrong, whatever. I messed things up, right? In that moment, I'm like, oh, no, it hurts. It hurts. But have yourself an accountability partner. Have someone you can just message or talk to who you can share this thing with. That is another thing that's going to help you because I remember on both, if not all occasions, I'd be speaking to Ant about it. And it's like, yeah, you were silly. Why'd you do that? And I'm like, oh, sorry, bruv. I'm traveling. My bad. It's easy done. And he's like, yeah, fair enough. Just like, don't do it again because that's the simple solution. Don't make these mistakes again. But most importantly, it actually doesn't matter. Like he said about the picture, the painting on the wall, it's just this little dot. No one's gonna notice it. In the grand scheme of things, these things are happened. These things happen. And again, in your back testing, just like he's gonna say in a minute, these things happen in the real markets as they do in back testing. So, Ayrton, lay it out for us. Let's hear it.
This is the perfect analogy that you've all been waiting for, guys. So, if you're reading a business book, if you've read any, then you know that they're full of mistakes. They're full of what the guy did wrong. For example, I'll use this one by Patrick Bet David, which I highly recommend. It's called Your Next Five Moves if you're wanting to read one. Very good book. It's full of mistakes. It's full of everything that went wrong and then the few things that went right that essentially made him who he is. He's a very, very rich man and he owns baseball teams and stuff. But he looks back on those mistakes. Do you think he goes into his next business and he purposely makes those mistakes again? He does not. And that is exactly what backtesting is. We make those mistakes, then we come into the live market or the next backtesting session, and we don't purposely make those mistakes again. It's simple as. And then the wins in here, maybe he realizes, oh, if I do more email outreach or something like that, I get more clients. The company's insurance, that's what it is. So he might get more clients. In backtesting, we might figure out, oh, wait, if I wait for this order block, I get more wins. So we replicate that. For example, a thing that might have been holding him back, he might have been cold calling too many people and they might not like that. What you might be doing is you might be looking at the high time frame too much. So in your next backtesting session, your next live session, don't do that again. Your backtesting is your business book and don't copy the mistakes. But losses aren't mistakes, in case anyone's thinking that's what I'm saying. But
Brilliant.
losses aren't mistakes. Just follow your strategy, turn it into your book. In fact, write a book about your backtesting if you really want.
I and I have a very great live example, and he is in this call right now, and it's Mr. Brooks, Mr. Josh, okay? Now, I know he said many times, hey guys, I'm having negative results in my backtesting, but in the markets I'm having positive results. This is a very good example of that. In backtesting, you're making the mistakes. And then in the live market, whilst maybe you're backtesting at the same time, you're applying the knowledge you've learned from these mistakes. And hold on, wait. Okay, well, I'm winning the live market now, but maybe the backtesting's not going so right. It's not going so well. Now, I know it's since turned around. His equity is going up. Woohoo. That's what we like to see. But it's, again, still an example. It still shows that the back testing is what is teaching you the things to apply to the live market. Now, in the live market, in the back testing market, you may be taking 4 or 5 trades a week. Every day, you're taking a lot of trades. In the live market, you're going to sit there and be like, oh, no, you know, in back testing, yeah, probably might have taken this, but I just don't need to. Like this setup isn't as good as this other model that might occur, you know? Like Aaron was saying, you might want to wait for things to play out more in your favor. You know what you're looking for, the ideal setup. Now, this might be thinking, okay, how does this all apply to losing? Well, it all completely applies to losing because again, backtesting is key and it teaches you everything. It teaches you your losses, your lessons, the things that give you confidence in the first place. So, not really sure what to add to that there. But backtesting is key, and that's what I will add. You reminded me there, Ayrton. Just because you've lost, just because you've lost does not mean you've done wrong or you've had a bad trade. And it is very easy, especially when, for the likes of myself, you have a strategy which focuses on consistent 2Rs. So 2R targets, consistency pays. Okay? Now, there are times where you are convinced and you have conviction there is a larger draw, whether that's 3R, 2.5R, 4R, you name it. And you sit there and you're like, okay, we've made an hourly fair value gap. We've reacted off an hourly fair value gap. I've got this in my defense. Why would it not go for these equal highs? So your trade is running all the way to a 4R target, and it gets past 2, gets to 3, and from out of nowhere, after inversing everything that you thought would be a problem, it tanks and hits your SL. That does not mean you were emotional, your trade was wrong, and you did bad. You have to be confident in your judgment and take that loss on the chin when you accepted going for that longer target. Because if you're going to sit after the fact, after you've had a perfect trade, with complete justification and say, that was a bad trade, or I got emotional, I got greedy, and these things, then you're actually insulting yourself and you're ruining your edge and your judgment. Because what you have to understand is that overall, long term, just like in backtesting, that edge that you saw spotted that 4R, that draw on liquidity, that should play out more than it shouldn't. So that should run more than that one time you from out of nowhere getting nuked, okay? It should play out. So when you have those opportunities again, if you've been nice to yourself, you'll be like, oh, this looks great, and you'll take it, not thinking about the last time it didn't, because you understand each trade is unique, each opportunity is unique, and losses do not define the trade or the outcome. It's about the process. So I know, myself, like I said, I have these opportunities. Ayrton, he's more new to ES, so he's more focused on the 2Rs, but like I said, in the past few months, I've had it where I've gone for longer targets, and it stings a bit. You're like, perfectly hit 2R and reversed. Okay. It's like, okay, well, if it went to 4R, like it does, actually more than it losses. First of all, going for 4R, you're getting 2R more than you would. So those times where it's lost, you've covered in one of those bigger trades. That's a simple counteract. But you need to be kind to yourself. You're your own boss, especially with trading. Never mind life, gym, so on. It's a longer conversation. Trading, you're your own boss. And you need to be kind to yourself and not get too dragged down in the dumps and in your emotions when you're losing. Because losing is when you're most vulnerable, okay? And susceptible to the evil thoughts that ruin you, bring you down. So be kind and accept the loss as a part of it, and it's not always going to go your way. So, not sure if you have
All we're
anything.
trying to do in the live market is replicate your back tested data. And that about sums it up. So we are going to end this in a second. I just want to ask you guys if you have any questions, just put them in the group chat. Um, do that whenever, ASAP.
Yeah, hit us
But
up.
yeah, essentially, do your back testing, know your data, replicate it live. If you lose and you did exactly what you did in back testing, you have not taken a bad trade, you've taken a losing trade. If you lose more than your data, again, that doesn't necessarily mean you're taking bad trades. It means either something's changed in the live market or you need to backtest a bit more in the in the backtesting market. And you need to backtest a similar situation, just so you know. Um, when is
Trump is the president on Monday.
Monday?
It. Who knows?
I
Honestly, who
can't tell you.
knows? Yeah, best bet is to go look at the market. If I get a setup, I'm probably gonna take it because I have no probabilities to know, and it is all probabilities at the end of the day. The volume could work in your favor and against. What I'm not gonna do is take a million trades on that day. If I take my
Yeah,
one trade and I get chopped out and price action's bad, I'm gonna sit out. If I see
yeah,
a 5 minute sell, like Ethan's saying, we don't favor sells, and it's not got any sweep, and it's like, okay, Trump's inauguration's today. This is like the most not sell ever. I'm gonna miss it. So pinch of salt on that day. Um,
And
Final thing.
also,
Oh,
wait, I'll just add to that Trump
yeah,
point. Our window is for 3 a.m. or
yeah,
4 a.m. Trump
3 a.m.
isn't getting inaugurated at that point.
Yeah,
So
they're
we'll be
asleep.
fine. Yes, it might be maybe a slightly different market in the morning, but even if it is one loss, our systems allow for one loss. Like that we'll
Mhm.
be fine if it does lose. So
It's not the end of the world.
we will be trading Monday.
I have a very nice ending note. So I believe it goes something like this. Failure is not fatal, and success is not final. In your lowest moments, when you're losing, when you're in drawdown, that is when it's going to show you who you are as a trader, not to anyone else, but to yourself, how worthy you are of the wins the most. Because when you're at rock bottom, when it's the hardest, when you're losing, that is when your true trader comes out. Okay? Now, I'm not just talking a few trades drawdown. If you experience months of drawdown and survive that and trade profitably out of it, that will be the day where you feel complete as a trader because you've experienced everything. Because winning is easy. Now, we've all come and started trading, and I'll be extremely impressed if I found a new trader who has not had some mad winning streak that's made them think this is easy and they're on a crazy thing. I've it's actually rare that you have people lose and then survive the losing and continue maybe trading all together or the same strategy. So understand that when you're losing, when these things happen, it's actually a test. It's an opportunity to learn, become far better as a person and as a trader. So on that
Yes.
note, I believe we don't have any more questions. So I hope you all have enjoyed this call. I hope you all found some value and some
Yeah.
information that you'll be able to take and apply to the live market, to backtesting, and to your journaling. So, yeah, not gonna lie, I
Yeah.
got a friend who's on an insane win streak. But you know what's next? He feels like
Yeah.
he's hacking.
Especially if he's just started, the he will have the losing streak. Trust me, there you go. It's demo on gold. He's
Yep,
especially having mad win streak. But
yep.
trust me, his loss streak is coming. Me, Tom, Josh, Max, we've all been there. Every single one
Everyone.
of us. We all got on the markets, started doing random stuff. It was working because essentially we're just flipping a coin and leaving it. And also we're on demo. So have a look at his trades, really, especially his first ones. He probably didn't even have a stop loss. So he could wait 6 hours until it finally came into profit and then he could close it. Or maybe he did have a stop loss, I don't know. But either way, he will have losers. There's no way you can just keep winning and just hack the market. You can follow data and you can come out with profit, but he is just flipping a coin. And I hate to say it, but his losers are coming and they probably will hurt and he'll probably turn to you and go, Jay, that stuff doesn't work. Give up on it. So be ready.
And another funny point about that, I know we keep going here, but the funny thing is, he'll have this win streak, he'll have the losing streak, like I heard saying, and right after that, he'll probably start winning again and have a good streak. And that's the beauty, and also the funny part is when people quit, right around the corner is the best bit again. Like
Yeah.
last year with gold, first year properly trading the same system, I had a great few months, then a drawdown. After that drawdown, I had my best trades ever. It was actually the most enjoyable period of trading ever because of the drawdown. So when you don't allow that to control your trading, but use it as fuel and information to be better, you become better. You become a better person. So yeah, um, yeah. Again, I hope you guys all enjoyed, and we'll end the recording there, Matt. And if you want to end it,
He's asked one
uh,
more question. We have a mill
oh,
account. What's that used for? Tom trades gold on that.
and that is it.
That's it.
Simple,
So yeah,
simple.
we'll wrap it up at that. So yeah, I'm going to stop the recording. Thanks for joining, guys. And yeah, I'll post it in the community ASAP.